Now, aside from national debt, many of you are thinking about your retirement plans. Dave Evans, the president of Evans Financial Group in Shreveport, joins us in the studio right now to kick off a 5-part series. It's about ways that taxes can rise while you're in retirement. Now, today we're talking about the first part of the series, which is changing tax brackets. Dave, thank you so much for being here today. First, let's talk about what your federal tax bracket determines.
Okay. The tax bracket determines how much of your income on the top end is going to be owed to the government. So that's I'm going to say that's your marginal tax bracket. That's the last dollar that you earn is taxed at the highest rate. And if it's 10% or 22% or whatever, we call that your tax bracket.
Now, Dave, what would be a reason that a person's tax bracket would change throughout their retirement?
Well, first of all, generally if you have a married couple, they take the standard deduction for the most part, which is about $25,900. They pay no taxes on that. Then it slowly goes from 10% then to 12%. A married couple could earn up to about $109,000 in change and still only be in a 12% bracket. But if somebody passes away, one of the spouses passes away, three things bad besides happening the passing away. Two things bad happen. One is they don't have the same standard deduction anymore. They don't have $25,900. They have $12,950, and then they start to pay taxes. And the second thing is they move into the higher tax bracket of 22% a lot faster. Remember, I said it was $109,000 is before they would get to the 22% bracket. If you're single, it's going to be about $54,000 and change. Now, 80% of men die married. 80% of women die single. Now, the point of that is both couples, both part of a marriage, both needs to be involved in and know what the finances are and what's going on, because it's going to change when one of them passes away. And it's going to change pretty significantly.
Absolutely, Dave. Thank you. And is there anything else that you feel is important for people to know when it comes to taxes in their retirement?
I think the key would be to make sure that both parties are aware of what's going on. We counsel with people all the time in our practice, and they've lost someone. And I just had someone in my office today, and the lady said, my husband did all of that, and I was absolutely clueless. And I think it's important that both the husband and the wife are aware of the finances and the taxes and how they're calculated and all that sort of thing, to make sure that they're prepared, because if one of them passes away, and one will, the other one needs to know how to do all that stuff.
All right, Dave, definitely some great advice there. And make sure to head over to KSLA.com for the latest in financial news and to watch this entire interview as well.